Okay, that's great. So, hello, thank you for coming. Today we're lucky enough to have John Slazers presenting a webinar called Optimize Trading Tactics to Make Them More Effective. Now, John is a little bit unusual in terms of the sort of people we have present here at Jigsaw, in that most of his customers are professional traders. And usually we have people who most of their customers are retail traders. In fact, it's one of John's, or a couple of John's professional traders, customers actually, that first introduced us. Now, John's got more than 30 years experience in the futures industry. Back in 1984, when I guess some of you were still in Pampers, he created JSServices, a research firm dealing with price forecasting and risk management. Back then, John could be seen on the floor of the CME, walking around, handing out his technical levels and his research results to other traders right there on the pit, basically handing levels out on pieces of paper. Now you can find John's analytics in the JS desktop application, which is integrated with the Jigsaw depth and sales. And the analytics in that product provide a clear definition of the market state and structure, as well as giving you an indication of which strategies work best on that given state and structure. So I'm glad to introduce John here today. So John, please take it away.
Peter, thank you for the introduction. Hello, traders. Excited to be part of the Jigsaw community and working with you guys. Today I'm going to go over optimizing trade tactics, but I'm going to get into really the whole foundation of developing tactics, and then show how our new integration with Jigsaw works. And one thing I'm excited about, these tools that are available. I mean, being able to see inside the order book, was a dream. When I first got involved in markets, it just, people were arrested that were able to do that. And to have these tools now is just fantastic, and it really matches with what I've always done, which is try to provide traders with good facts, and then the facts that I'm providing for traders are more macro structure. And what the Jigsaw tools offer is really the microstructure. But bottom line is their truths, and there's no subjectivity here. These are the facts. Everything that JSServices does is quantitative. When you're looking at the Auction Vista, you're looking at real-time facts, and that's what a trader needs, because the real difference between a discretionary trader and trading against machines is your ability to trade intuitively, and that's what these tools really support. Just a little bit about what we do. We optimize strategies and identify opportunities using our unique market state analytics, our applications, and our analysis. And we do this by identifying the market state, its structure, and the trade strategy themes, which help to improve your clarity and awareness of the market condition to anticipate opportunity. And the reason it works, and why we've been doing this for so long, is everything that we do is based on market truths. And and our goal is to provide traders with objective facts so they can make better intuitive decisions. As Peter said, I started out in the business, building my business in 1984, literally, writing my technical levels on trading cards and handing them out to traders in the pit. And I became a member and traded on the floor for a while, but I was always more macro, and anticipating that the markets would go electronic. But when I first got involved with electronics, I was fortunate enough to get on the Globex Screen Design Committee, and we all thought, oh, it's electronic market's going to take over right away, and it took a good 10, 12 years to really transition into electronic markets. But now, you really have an advantage, and I see a lot of traders just kind of still focused on, like a pit trader being one market, and a lot of traders are still trading that way. And when you're in electronic trading, you can really take advantage of other markets, and instead of having to, using a football analogy of taking third down nines, you can always play second down and 2. You can really just kind of cherry pick opportunities. And as I mentioned, our our analytics, we really provide, look to provide that foundation for traders. Really what the basis is, and helping them understand, what's the state condition, what's the structure of that condition, and what are the strategy themes for that session, so they have better clarity. And what I want to, since this is our first webinar together, I really want to go down to the core and talk about really creating the proper foundation to really be able to optimize something. You need to have the right foundation to do it. So we're going to get into that today, and what JSServices analytics, they really provide the basis to standardize a trade plan, and so you can start to make your approach more systematic. And many traders, they focus on optimizing tactics, but they lack the proper foundation. They put all this effort into building a strategy foundation each day, doing their homework, kind of like building a sandcastle, and then when the tide comes in, it breaks down on the first wave. Without that proper foundation, there's no benchmark to identify, what didn't work, why it didn't work, and the trader, is lost and loses confidence. Not to mention, being physically drained from hours of homework, and then emotionally tired from the frustration of, inconsistency, and just that feeling that I'm just missing that one piece. And some feel that, if I only find that one new tactic, it'll be the solution that puts them on the path to success. And what's really missing is this strategy foundation, and the development process to create this foundation is what we're going to go over today, and show how this, having this, a trader can create a more sustainable, consistent strategy, and they can enhance their performance and make their trading tactics more effective. And the development process, where most traders are, just focused, like I said, on this optimization section here. You can see my mouse there, but what they're missing is being able to kind of standardize that, create a standardized trade plan, normalize that into a trade strategy, and then you can optimize your tactics. And so we're going to talk about what that means before we get into this properly. And so standardize, to conform to a standard. And during this, to standardize something, and everything that we're going over, it's all modular. You can really kind of pick up wherever you feel like you're missing a piece and jump in. In standardization, we're really going to standardize analytics, but
John, can I just interrupt a second? We're still seeing the application integration slide. Did you move forward, or?
Let's see.
No, it just still says application integration.
Here?
It's still the first slide you had up.
Okay.
Maybe you kill the screen share and start it again.
Okay.
Okay, now we see what we do.
Let me go backwards a little bit and catch back up.
Okay, I think you're good now.
Okay, great. Sorry about that. I had the view on my end. Yeah, like I mentioned, JSServices is really more all about the macro structure. The key with what we do is we are providing you with facts and truths. This is quantitative work. We've been doing it for some time, coming off the floor, and the key to trade plan is to really be able to use our analytics to standardize your plan and provide more of a systematic approach to trading. And so here's the so what the development process is, I mentioned, most traders are focused on the optimization of their tactics, and it's frustrating because they don't have the proper foundation and they don't know what they make a change, they don't know why it worked or didn't work, and then if it didn't work, what's that mean? And you get that when you have you really have that foundation. So we're going to go through these steps of standardizing a trade plan and normalizing it into a strategy, and then being able to optimize our tactics. So standardize to conform to a standard, and the first start to really just kind of wipe a clean slate is to align your trading with your core strengths, with your personality strengths. And something that I'm going to offer at the end of the presentation is a personality profile assessment, which will go over, will help you do that, to really kind of break down who you are. And it's really important. I call it strategy-based trading, where you create strategies based on your core strengths, and then you align those strategies with market states that complement it. And so, part of that is taking, really going and doing a personality assessment. It helps you to understand your motivations, your expectations, your risk tolerances. These are all unique to you, and the closer you design your strategy and your approach to the market based on who you are, it makes it easier to follow it. That's the bottom line. But from that profile assessment, you can then start to align, your skill sets with your method, your style, what type of trading you should be doing, even what type of asset class you should be trading, and really kind of come up with a trade plan from that basis. And then this, to start to make this more systematic, you're going to take those, that foundation, and maybe you have this already. You have your foundation, and you're comfortable with, who you are, and you have your plan, and you're solid. You want to just jump right into aligning your method with the JSServices analytics, which really provide the technical foundation that you can use to create more of a systematic approach to your trading. And so we break it down into three main pieces: the state condition, the structure of that state, and the strategy themes. And so I'm going to go through each one of these quickly, and just so you're really all on the same page. And so, what is market state? Market state defines the condition for the trade period. So, markets are always expanding and contracting, and they do that in different ways. But most people look at, if you talk to someone about what's their market state expectation, they're going to give you more of a black and white definition. The market, we had markets in it's trending, or the market's not trending. And that's really, really kind of a black and white definition. And I call those general market state types. JSServices has identified 26 unique conditions. Is that the markets do expand and contract, but they don't always expand and contract the same way. And when you look at this and you say, oh, it's there's so many market states, and this looks complicated. Well, it's really just an awareness thing. It's not complicated. It's more of if you're looking, if you're observing the market, and you're observing it through a lens of a general market state type, it's really a black and white. So just saying, you're watching the game on a black and white TV, it's probably fuzzy. Versus if you have this more detail, it's it's more HD, and it's more of a signature market state. So you have better clarity, because every market state that we've identified are all conditions that you've traded and lived through. If it's a bull trend, or is it a digestive bull trend, or is it a bull trend acceleration, or is it a bull trend extreme? These are all conditions that you've traded through. We've just gone through and really documented the certain tells and nuances of those conditions, and identified the characteristics to look for. And so then when you're in real time and you're trading, you are able to really anticipate what happens next. And also see if the market is performing to that condition, or if the market's transitioning, because markets are always transitioning from one state to the next. But and there's certain tells that you can look for in the conditions that'll give you insight to that. And then we also provide a price expectation. So for a bull trend, what's the price expectation? By definition, is a market that's making higher move highs, higher move lows. That's the definition of a bull trend. If this market stops making higher move lows, it's no longer true. It's no longer a bull trend. The market's in transition. It's doing something else. But that's the expectation. And then there's certain attributes. Good momentum, positive bias, good volatility expectation, and you may have a strategy that just is going to look for specific attributes that that your tactics work best. And so, just because in a bull trend market state, you might be a volatility trader, and that's going to be one of the market states that kind of pop up and say that you want to participate in that market. And so, these market state characteristics, they improve awareness and provide a basis to standardize a trade plan. So if you're painting a picture every day of what's the, this is like the base coat. Today's a blue day, or it's a red day. And blue days are not always straight up. There's definitely, you could have a complete market can be in a bull trend, and you could have a complete negative day, and that's called a bull trend. It's a corrective move in a bull trend. It doesn't even have to be a bull trend correction. It's just a reaction, an impulse, and that's just part of what it means to be in a bull trend. So the characteristics are defining that environment. And so, this is where you're aligning the analytics alignment section of creating this foundation. You're going through and identifying, if you like to buy the market, and you like to buy the market in positive trend states. Well, here's 4 trend states that really, that tactic or that strategy that you apply is really going to, it's going to be easier. It's going to be easier for you to see when it's working. It's going to be easier to see when it's not working. And so you start to align your trading with these state conditions. And so the next thing we need to align is the structure. So what is market structure? Well, market structure defines the alignment of the state condition. So if we have a market that's market that's trending higher, this is the price action, and then we have this, where does this positive trend cease to be a positive trend? When is it not true? Well, it's not true when it takes out this lower trough. And then that gives us a signal that tells us this positive trend is no longer true. The market's in transition. It's either going to transition into a negative state, or maybe a neutral state, or a corrective state. We don't know, but we know it's in transition. And then the structure is what aligns it. So if this market transitions here into a non-trend state, that's a digestive sideways state. So now we have structure that defines that sideways action. And so at the structure point is where the states shift and change. And that's what's important about market structure, is that it's the alignment of the state, and it tells us that once the market breaks out of this non-trend state, okay, now it's no longer digestive. So we shouldn't have that digestive expectation. We shouldn't be running our deviation strategies because we're going to get run over, because the market's potentially going to shift into trend mode. And then the market structure helps us to define, okay, well, as long as the market's below this peak, this thing is in a negative trend mode, and we're anticipating to make lower lows, lower highs. So I want to talk a little bit about the difference between market structure and price structure, just so we're clear. Is price structure as you're watching this price action. Absolutely, you're watching higher move highs, higher move lows. You're watching breaks in structure, just classic, watching price structure. Market structure defines the state. So it's market structure is what defines the state condition, and it defines where the state condition will change. It's part of the state condition. It's a quantitative study, whereas this is all your technical analysis, Fibonacci's and GANs and trend lines and profiles and all that. That's this. market structure is quantitative and it's defining the state. So what's not, market structure is not support and resistance levels. What it is the technical alignment of the market state. And by understanding that, you can start to get more clarity to what's going on in the market. And so if we have a market state that's neutral digestion, so this is actually a general type state, neutral. You've got, now we're going to put some structure around it. And this is our study that we have integrated, Jigsaw. It's our price map, and there's with basically 3 price points, we can define the structure of every market state. And we have what we call our critical range with our upside pivot and our downside pivot. So you could look at this as a resistance area and a support area, but it's a resistance, it's a structure high point, structure low point. And then we have what we call our sentiment bias, or R level. And this is a directional bias. So basically above this price you're positive, below you're negative. And so now we have this state condition of neutral digestion, and now we're putting some structure around it. And not only structure, but we're putting a sentiment bias. So we know that this market's neutral, but if we're trading above here, we're leaning positive. We're trading below here, we're leaning negative. So we're getting more detail, more clarity to what the condition is. So we have this critical range and sentiment bias, and these really start to form the foundation of the market. And both the critical range and the sentiment bias are part of, I mentioned, the price map, which is a complete framework. And I'm not going to get into all the details of it, but basically we'll get into a little more detail. But as you start to dial into the structure, there becomes smaller structure points. But on the broad strokes, the critical range and the sentiment bias are what we want to focus on for defining the real state shifts. And so the critical range is the hard boundary that outlines the price structure that defines each state. So it's real basic. We've got a price band. When we're in a digestive range, it's typically that's your digestive range. And if you're in a trending mode, we're going to use those points to identify, is that trend still true, or is that trend breaking structure. So the critical range provides insight to when shifts in state will occur by identifying where they will occur. We don't know when things will happen, but we do know where. We do know that these shifts in state are going to occur at these specific points, and that knowledge is real power. So, and that's really what you're looking at every day, is you're monitoring price action within market structure to see if the market is holding structure or if it's breaking structure. And the other key point is this sentiment bias, or R level, or reversal level. Some people call it an over-under number. It's that one price point that determines the sentiment for the day. Literally, if you get on with our service, just taking that one level and drawing it across your charter, you got it with, integrated with Jigsaw. Is this is that line in the sand. And what's interesting about the R level position is that its position on that price map framework, further defines the state characteristics. And so what does that mean? So if we're in a bull trend and the sentiment's above the market, it's actually skewing that state condition. So the characteristics of a bull trend are positive, higher move highs, higher move lows. But if sentiment's above the market, it's actually giving you an expectation for a corrective move. And so now all of a sudden it changes the landscape. You get up and it's going to be a sunny day, but there's a little dew in the morning. So if you're going for a run, you better be careful so you don't slip on the pavement until the thing dries out a little bit. So you might need the market might need a little corrective pullback down to support before it can try to resume that bull trend. If the sentiment's below the market in the bull trend, that's all good. You can be a little more fearless on accepting buy signals. And when sentiment's balanced in the middle of the critical range, it's typically a dynamic state where that state might be you're either going to have an energy day where you have a real strong surge, or you could have maybe a corrective turn. So everything that we're doing right now is just improving our awareness. We're improving our awareness of the condition, so we can anticipate opportunities, so we can see clearly what's happening in the market. And why this why does this market structure exist? It really has, in terms of futures, zero-sum game, and really what we've got going on is we've got the fundamental traders going against the technical traders. Most day traders are technical, and there's a big challenge. You've got these quantitative high-frequency traders, and you've got these massive funds, and that's what you're competing against. And what happens with these big funds, all the markets are big, really based on what the funds do. The funds don't care if the market goes through the point of control, and the point of control is also this trend line and this fib and this that, and there's all this confluence. The fund really doesn't care. Their short-term outlook is 3 to 6 months. They come into the session, they know they're either going to hold, they need to add, or they have to hedge. And what they want to know is, where's the stake going to change? Where's the market? Where's structure broken that I need to do something? And so they're focused on the structure of the market. And all the points in the middle is where the high frequency guys are. All the predatory algos live in here, and they look to pick off technical day traders. And the funds come in here at structure points because they want to know that, okay, this market's in this neutral negative extreme, it's pressing the extreme. Is it going to transition into a more of a negative trend state, or are we just going to bounce back into neutral? And they need to know, do they need to hedge here? And so market structure identifies the price alignment of the market state where funds provide edge and high frequency predatory algos have less of an advantage. So market structure identifies the price alignment where shifts in market state occur. And this provides a framework to standardize trading where liquidity is the highest, risk is the lowest, and reward is the greatest. So that's what this market structure framework is giving us. So we have this state condition. So we have what color is the day, what's the nuances of that day. We have the structure of that state, and we know where that state can change, and where those points are that we're going to find more liquidity in the market, and you're going to have some real activity there. And now we need to align it with the strategy, market strategy alignment. So this is when we're really getting creating a systematic approach here, where it becomes an if-then statement. If the market is in this state and it has this structure, then this is what you do. If you're in a bull trend correction and sentiment is below the market, then the optimal thing to do is to buy a break off sentiment, because that's the lower extreme of this bull trend correction. And then if the market starts to ramp up and bounce from there, you want to leverage it up, because you may have just bought that lower extreme of the next reaction higher. So it's always like I said at the beginning, this is all awareness. What's the state condition? What's the structure of that condition? And what are the optimal strategy themes that are a function of that dynamic? And we call it our playbook. So we've identified 26 market states, and we've identified 9 different sentiment skews of where the R level can be on the price map structure, and that results in 234 unique plays. And so with our desktop application, you come in for the day, identifies what the state condition is, the nuances, the tells, all the characteristics, the expectation, the attributes, the structure of that condition, and then what are the optimal strategy themes and the hedge strategy themes for that condition. And so the optimal theme is if the market is going to perform the expectation. So markets are always transitioning from one state to the next, and and every day you come in and you want to identify what is it doing. Is it holding structure? If it's holding structure, that's part of it's optimal, because and those are the money days. Those are the days when trading seems easy, because the market is easier to predict. If the market breaks structure, that's to tell that the market's in transition, and we're going and call that a hedge theme day. And those are harder to predict. So on a bull trend correction, if the market holds structure and we get a positive reaction off this this sentiment bias or off the downside pivot of the low part of the critical range, we have good trade vision. We may have just, if the thing starts to build positive structure, we may be in for a ride. We may really have a big trade. And versus if the market breaks structure and does not bounce off this area, we start to fail here. Well, now we know that this market is no longer in a bull trend correction. This is no longer true. So now are we transitioning into neutral? Are we transitioning into a negative state? Are we transitioning into just a bigger digestive state? We're just not sure. Is it at an extreme? We don't know where it's going, but we do know that if the market does break here, it could really collapse, and so we ride this until it tells us it's not true anymore by watching price structure and how it works through our price map. And if this doesn't follow through, then the market breaks structure, then you'll have what we call a non-event day. So it either holds structure, breaks structure and transitions, or then you have one of those days where it just goes linear sideways. And we've all seen those days before. And so that's a function of the market breaking structure of both the optimal theme and hedge theme, and it's a non-event day. And so part of the so how as we're starting out from looking above the forest in a big macro picture, and now we're continuing to dial into to more detail, and there's specific strategy themes that are associated with these optimal and hedge themes, and the entry strategies are we fade momentum into a structure point, we trade with momentum in a breakout, or we have what we call a reversal, a momentum reversal. The market takes out the level and then reverses back through it. And so each of the playbook strategies, we have our optimal themes, our hedge themes, and we identify the specific, not only the type of entry strategy, but also the specific price map level that you want to execute that. And so this is where we get into the alignment of aligning with the strategy themes. So this reads buy R fade. So it's we're looking to buy the market at the R level using a fade entry technique. And these strategies, absolutely, they can be just verbatim. You're going to enter at this level. But what's even more important is that to understand these are themes. So especially if you're in a fade situation, we're anticipating this market should fade in front of this figure, and if it doesn't, it's a bit of a tell that something might be up. So if a market's going to build higher move highs, higher move lows, it's typically going to bottom out above that key structure low point, and if it doesn't, that can be a tell. So it's important to understand these are not only are they specific strategies, but they're also kind of a theme expectation. And so specific strategy themes are inherent in the market state and structure alignment, which provide a standardized approach to systematically apply a trade plan across all markets. So you can come in and identify, start to standardize your method with these analytics, and you can then take that to any market. You can really just search out a market that you like to sell the market, and you're looking for breakout trades. You can really transition instead of just focusing on one market. You can transition and go to really any market with that. And so here you identify the bear trend. Here's a reversal strategy, which is a nice strategy in a trend, especially when sentiment's balanced in the middle here, because if the market can't build negative structure below that sentiment bias, that can be a great tell that we're going to have a transitional trade. And so this is a classic transitional trade where the market just goes. And if for some reason the market came here and kind of broke structure here after it did that, that would be a tell that the thing's going to go sideways. And don't even trade this market because it's going to be a nightmare. But this is a classic transitional trade. So we apply JS analytics to standardized trade plans and make them sustainable. So by using our market state analytics, that's going to and standardizing your trade plan to it, it'll make your method more sustainable, which is what we all want. And so the next phase is normalizing this. So we've standardized our approach to, one, we've standardized it to ourselves. Who are we? What are our traits? We have that foundation. We've standardized it to the market state analytics, so to that foundation, and now we want to normalize it. And so to normalize it, we're going to use our applications, and we're going to for our trade execution and trade management. And so what is normalized? To make normal, especially to cause, to conform to a standard. And so through JSServices Desktop and Jigsaw's Auction Vista heat map, we're able to normalize our strategies, our trade plans into a strategy. So every market state has its own characteristics and structure that define it. And certain inherent strategy themes will have better alignment than others to a trader's unique standardized trade plan. By normalizing favorable market state conditions that complement a trade plan with specific market structure points, the optimal strategy can be achieved. So we're building on our standardized trade plan, and now we're going to normalize it and using these applications to build this into our workflow. So this is the JSServices desktop application, and what you have here is what we call our market grid. And these are all our different symbols. And when you click on a symbol, it'll come up down here to tell you what it is, because different providers have different symbols. JSServices has its own symbols, and some match up, some don't, so you need to click on that. And that's one thing with the Jigsaw setup, is you need to make sure that the symbols match from your data provider to the JS symbol. But so to normalize our approach, I like extreme states, and I like reversal strategies. The market's excited, it's pressed to the downside or upside, and I want to get that quick reversal strategy. So with the grid today, I come in and I see that corn and silver are in a neutral, negative, extreme market state, and silver is one of the markets I like. And so that now I'm quickly on top of a trade. I've got my plan is all standardized to these analytics and to the state, to the price structure of the state, to the specific strategy themes that I like to look for in that state and structure. I own this method, this condition. I know when I know when it's working right. I know it tells what's happening, and I'm using the desktop to do that. And so then so I identify my strategy theme that I'm looking to anticipate, and now I know the strategy I want. I know the specific price point I want to get involved with, and now I need to get into the order book, and I need to see what's going on at the moment. So everything's all fact-based, right? So I've got my macro facts, and now I'm dialing into the moment and what's happening at the moment. And so to take a plan, a standardized plan, and normalize it into a strategy, we're going to use the Auction Vista and the desktop application to do that and to make them more consistent. And so now we've got our foundation. We've standardized our plans to ourselves and to the market state analytics, and we have our applications that normalize everything, and it works into our daily trade flow. And now it's time to optimize what we're doing. And so how do we enhance our performance? We can enhance our entry with certain thresholds that I'm going to go over, exits, our position management, our risk thresholds, profit. We've got order book dynamics that we can pull into this, and to ultimately to optimize what we're doing. And so, what is optimize? To make it as perfect, or as effective as possible. And so, part of the price map is what we call market metrics. And the price map analytics provides several market metrics which are used to determine the risk-reward viability of an opportunity, as well as identify the thresholds that outline the areas for signal acceptance and confirm a structure break. And so what this is this really just the variance around a price map level. Here's the example with our sentiment bias R level, and two of the metrics that we have associated with that level are a variance, and this is really like a slippage area. I mean, if the market, the area is, if you're in the variance, you're really at the level, and if you find yourself trying to enter the market too close to a figure or structure point, what will happen is you're going to miss a lot of good opportunities, but you're going to participate in all the losers. So you need to so understanding these this microstructure around these price map levels is important, and the variance is really an optimal entry area. The alert distance is your signal acceptance. So as long as you're within the alert distance, you can accept signals. When you move outside the alert distance of a structure point, that's really where the algos are. And you really want to keep your signal acceptance. So absolutely you can accept a signal at the very edge of this alert distance. And in many breakout strategies, if you don't do that, you'll end up missing the opportunities. Another metric that we have is what we call our average price map distance. And this provides a reward or target metric for a trade opportunity by identifying the price segment distance that the market's trading in. And so, basically this whole price map framework is really like a ladder. The market moves from one level to the next. And the average price map distance is pretty much the difference between two major levels. So let's say you took the upside pivot and subtracted it from the directional, that's about the average price map distance. And that's the segment moves the market's trading in. And anytime you're really in any opportunity, the market wants to pay you out an average in the APMD. And so it's an important metric to understand and to know that that's what the market's paying out. So if you're putting capital at risk, the market's going to, it wants to pay you. And it's paying out either half APMD moves, full APMD moves, or 2 times APMD moves. I'll show you a little bit of that. So this is where the optimization process starts, by incorporating market metric thresholds into a normalized trade strategy. This performance enhancement process shifts the focus from the macro structure of the strategy to the microstructure of a trade tactic, whose effectiveness is enhanced by including dynamic order book events. And so we're optimizing our entry strategy and trade tactics using metrics. So we have our fade, our breakout, and reversal strategies. And so on a fade, we know that we can accept signals at the top of the alert distance. This is when we can start accepting signals at the top of that zone. And we also know that the variance is the optimal entry area for a fade. And we also know a fade, we are anticipating the market to bottom out in front of that figure. We all fade moves. This is just giving you more structure to fading a move and understanding, the kind of what's the structure around those fades. On a breakout, when does the market really break through a level? What is that variance? How many ticks is it? Well, that's what the alert distance can help you with. It can identify once the market breaches that alert distance, it's confirmed that it's through that price point. And so then, and you're clear to enter right at the top of it. It could pull back. It could pull back all the way to the opposite alert distance area here. But this was the key confirmation. And you can even use, another alert to say, hey, for a breakout, I need the market to start on one side and move to the other, and that's going to give me a true breakout. And same with a reversal. What's a reversal? Really, it has to take out the alert distance and then come back up through it, and that gives us a nice clean reversal. And absolutely, sometimes reversals are going to bottom out here. Sometimes a reversal is going to exhaust in front of the figure. Again, it comes down to some of the order book events or other exhaustive events that might happen that are kind of the essence of what a reversal is, which is an exhaustive strategy. Or a breakout. A breakout could happen sooner, if the market's holding that good price structure. So again, these themes are also, they're themes and they're going to be a little dynamic. And then we can optimize our exit strategy in TradeTactics using our metrics by understanding that the markets like to trade in these segment moves. And when you put a trade on, you're at risk, just by the volatility in the marketplace, and you need to get paid at least a half APMD. And so you need to know what that metric is. And that should be your kind of a minimum opportunity. Because if you start to go into smaller time frames, then you're really competing against the algos, and they're too fast. You can't compete against them unless you're running algos yourself. And so now we're going to take a look at the integration and kind of putting this all together and optimizing things and talking about some of these order book events. And so here's our price map framework. Here's our upside pivot, our critical range. Here's our R level, and here we can see the downside pivot. And here's our directional. And so what we have here is a market that broke into support, and we can see it kind of moving into this variance. And you can see on Jigsaw we've got shading here to identify the top of the alert distance, and then the start of the variance, and then the figure. And we have it all labeled. So that would be here's an example of a market coming into a downside pivot area and then attaining a full APMD move. And so, with the desktop application, we have this, again, it's awareness. It's just improving your awareness. Here's the macro context and structure, and here's the microstructure and dynamics. So TradeTactics can be optimized by incorporating the microdynamics of the order book to make them more effective. So we're going to take a look at liquidity shifts, imbalance, intensity of trade, and resting paper. So our desktop application, we identify what's the macro state structure and strategy theme. Again, you look at the market, where's it at? That's the first thing you do is where's the last traded price within this structure? What does that mean? If it's trading in here, it's not that interesting. Don't be, if you're trading in the middle here, there's no major themes going on, better trade small. When the market's giving you an opportunity here, better trade big, because this is where you have to put your capital risk. This is the money trades. You have to leverage up on the market. It's like you're counting cards. When you get aces, you got to double down. And so we identify this market potential reversal opportunity. We know with our metrics that what we're looking for. And now we take a look inside, and this is crude oil today. Yeah, so this is crude oil today. Market's in a neutral digestive state. Sentiment's above the market, so it creates this band above the market. The optimal thing is to fade momentum into that upper band, sell crude oil around 40.45, or if we get a false breakout to the downside, it can give us a buy DP reversal opportunity. This is the optimal strategy themes for this neutral digestive state with structure, sentiment bias above the market. The market breaks out above the R level, above 40.45, that's going to be a tell that this market's transitioning out of neutral digestion, potentially into a trend mode or positive transition, neutral transition. And if the market breaks out to the downside, but then can't get above the directional, it's vulnerable to then start to transition negative. And so the example that we're coming into, the market's producing a reversal opportunity, and we can see our alert 1, alert 2, alert 3 to confirm it. And so here's our alert 1, market's above our downside pivot, above that alert distance right at the beginning. Then we come back down through the alert distance here, gives us our second alert, and now we're coming above the alert distance here to confirm that we're in a reversal in crude oil. So liquidity shifts. Shifts in liquidity improve timing by identifying the conditions in the order book are changing, and trade tactics should be adjusted to this fact. And so in this example of the reversal, let's take a look at some liquidity shifts that helped us. So, when we're coming in, when the market's trading here, we already have our fact foundation. We already know that the market states neutral digestive. We know that we're looking for an exhaustive reversal off the downside pivot, so we're anticipating this market to get excited to the downside. We want it to fail here, and we want it to exhaust. We're looking for an exhaustive turn to buy, because that's our optimal strategy. So as the market's coming down, we're getting some trading, and here's a liquidity shift. So we have some resting paper here that moves out of the way. So it's just a little bit of a tell. You had some paper here that's not moving, but this guy's moving out of the way. And so it's, everyone's got their own ways of looking at things in their different styles, and I'm a little longer term, but so this is a tell for me that this market, that we're getting ready to make a play for the downside pivot. And then after the market gives us a turn, we have another liquidity shift where we have this exhaustive break. We broke below here, and now we're breaking price structure. So the market's working negative structure, right? Lower move lows, lower move highs. It's breaking out to the downside. All of a sudden it pauses. It's pausing at the alert distance, and then we get a break in price structure here, and then we get a liquidity shift. So all of a sudden it lights up a little bit. The market starts to move up, and we continue to see the liquidity start to shift up. And then here, as the market gets back above the downside pivot, and this is with this tool, by having the auction vista, you're able to anticipate that reversal before that you get this confirmation. And it's absolutely valid to start entering the market early, especially when you're having order book events, to do that, to anticipate it, as long as you understand that it's not confirmed until you get that breach of this alert distance. And absolutely the market could just immediately turn from here and squeeze you. So you can't put any size on or leverage on until you get some confirmation, but you can absolutely anticipate an opportunity, especially if you start to get order book support with these liquidity shifts. And so that's I always like to see a liquidity shift to confirm a new move. But remember, we're anticipating this. This is our backdrop. This is our expectation. We're looking for these tells to happen. And so when they do happen, it makes it a lot easier to act on. So the other order book event is intensity of trade. So the intensity of trading activity is a good confirmation event for both fade and reversal momentum shifts, as well as momentum breakout trades, which can improve the timing and optimize trade tactics. And so in the same reversal, again, this is a good tell here that we may be having an event. We're looking for that exhaustive event. And so we can see this intensity of trade, lots of activity. This paper didn't move out of the way, and they grabbed it, and then they continue to have a high intensity of trade here. And then this is a part of the intensity of trade is a divergence with no intensity of trade. So as you have a market that's getting excited, and we know this is our breaking point of our structure, and now the market starts to break out below the alert distance, and we're not getting the same intensity of trade. This is a tell as well, that things might be exhausting. Just getting quiet. And so then all of a sudden you get that, you're getting that break in structure. The market's starting to shift up, and then here, when we breach the alert distance, we get another flurry. And so this is a good confirmation. And you can see that just because we had the flurry didn't mean we just scaled right up. But what we did do is we pulled back to the variance. And this happens a lot. You'll get the breakout and you'll get a pullback. And then the variance area is a good level for that pullback. But it didn't need to. When you're here, you're valid to start buying this market. And what you want to do is use the average price map distance to understand what is this trade worth. Well, if I'm buying it at 42.45, I'm looking for it to go up to 43.36. That's just what the market wants to pay out, and at least it wants to go up to 42.91. So what else can help us in the order book? So resting paper, the dynamics of the order book make all resting paper fleeting. So you have to acknowledge that it can be gone in a flash. But however, the length of time it persists can impact its reliability that it's there. In addition, identifying alignment with long-term resting paper with price structure and JSServices market metrics can improve the effectiveness of a trade tactic. So this is how I like to use resting paper. So you have, here you have, this is our same, this is crude oil. It had the reversal. Here's the alert distance. Here's that flurry. Here's that pullback. And then here it takes out, this is resting paper. Now this resting paper, I'm anticipating it to take this paper out. Why? It's in the middle. It doesn't mean anything. This is, there's no supporting structure to this. And so this resting paper, which has been here for a while, is interesting to me because it's on the top of this, the directional alert distance. So here's my directional, and there's the top of the alert distance. And what I like about this here, so if I'm getting a buy signal here, I'm discounting. Absolutely, they could reject here, and the market could do whatever it wants. Absolutely, can reject here and come down and get me. But more likely than what's more likely to occur? What's more likely to occur, since it's in the middle, it's going to take it out. What else do I know? What are also the facts? Fact is, I know that I'm in a reversal. Fact is, I know the market likes to trade in APMDs. Fact is, one APMD is 43.36. Fact is, I've got resting paper identified here at the top of, through the directional. So I'm actually a little more, even more bullish because I've got all this dark and it's lit up here, which is through my level. And I know that this is a big figure because if this is going to turn sour, I know it should fade in front of this figure. That should fade in front here. And the order book is lit up through it. So it's telling me the market might want to go higher. When I'm getting in here, and as we move through it, we get some sellers to come in, and then they just jump right through it. But that's how I look at resting paper. One, it helps to identify potentially how deep into the metrics the market can go. And so it helps to tweak out your entries and your exits. And so, just kind of following through on that same move. Took out this alert distance here and you took out this paper. What I thought was interesting is, again, you had resting paper come in at the top of the variance off what we call our CR minus. Oh, I'm sorry, this is mislabeled. It's actually a CR plus right here at 43.71. So this was another thing that told me that maybe can work in this exhaust. I'm getting some liquidity coming in here. Got this kind of stacking up a little bit at the top of this. This is what's called, we didn't go over this, but as you come on trial, you'll get more details of the different levels, and this is called a validation level. And for the market to confirm a breakout above the directional, it needs to clear this area, and to see this resting paper coming at the top of that validation level, kind of foreshadows this normal move. Plus, the market already had a full APMD move. Having to surge through this and pause here makes sense. And so that's how I like to use the resting paper. So on order imbalance. Order imbalance, when aligned with the price map framework, identifies and confirms opportunities, so trade tactics can be applied to capture these dynamic occurrences. And so, here, we had the surge up, and now we're pulling back, And as the market's pulling back, we get this imbalance. And so at this point here, we're getting this flurry of activity, and here's our directional. So we basically pushed up to this level. Again, this is a half APMD move. So we're talking about full APMDs. They had a reversal at a full APMD move. This is a half APMD. This is a half APMD move. Now you're getting a half APMD move back here, and we can see that there's a bit of an imbalance where you've got all these buy orders are stacking up, and they're stacking up at the lower alert distance. And so and then we see all this darkness here. So a lot of times, and it's starting to get lower later in the day, and just giving more clarity that where can this thing go? Well, it can bounce back up to the top of the the opposite side. And so that's and that's still that's money. So that's having them bounce from 29-30 area up to the 50 area. But there's better examples of imbalances where you have the market really gets deep and lit up, and there's a lot of darkness, and then where is that imbalance happening within the structure and then within the context of the state. And so this you have this if you're just focused on optimizing your tactics without the proper foundation, you're going to be frustrated. And you can, by standardizing your method, when you get the email from the recording from this session, there's going to be an article I wrote on peak performance, and there's going to be a personality profile assessment. And I'm offering a free assessment to anyone that comes in and subscribes to the service for the first quarter. And you can read through the documentation and see if that makes sense for you, and you can take the assessment. I really, I think if you're starting out, that's the place you have to start. So basically it really points you in the right direction of what's your path, what's going to work for you. And then when you align that with our analytics, you really have a strong foundation to really systematize your stuff and create this unified approach that you really can take anywhere. And then normalizing that with our desktop, you can quickly identify different opportunities and really put yourself in the sweet spot, and help to make your trade execution and your trade management more consistent. And then to optimize it, you need the option vista to really dive in there and see what's going on in those thresholds to enhance your performance and to see what's happening with these dynamic order book events. So it really breaks down to observing price action within market structure in the context of the market state and underlying strategy themes to gain a competitive edge and the ability to anticipate opportunity within market metric thresholds during dynamic order book events. And that's really it, just focusing on the facts. There's no thinking in trading. There's only doing. You're either doing or not doing. No thinking about it, because you know what the state is. You know what the structure of that state is. You know what strategy themes are in play or not in play. Where's the last traded price within that context? So you can anticipate what should happen. If the market's in the middle, there's nothing to do. If it's at within a market metric threshold, okay, now there's something to do. What's your tactics say? And now, are there any order book events that support it? That's your timing. That's your trigger. So, that's my presentation today on the desktop and our integration with Jigsaw. Now, I know we went over a lot, but we do have it recorded. I wanted to spend time and go over having a proper foundation, and that's why I'm offering this personality assessment, because I think it's important to know what those things are. I mean, little things like, if you are more of an extrovert and you need more stimuli in your trading environment, and if you don't, it's going to cause you to overtrade. So literally playing some music or having a window in your office or being part of a chat group or trade room, it's going to take the edge off. It's going to relax you. And just that one little thing can make all the difference in your trading. And there's a lot of different little traits and things that you can tweak out, to really just to calm yourself down, make yourself more stable, and creating that sustainability. Make it easier to follow what you're going to do. And then when you standardize that with our analytics, you're standardizing with an analytical foundation that's been developed over 30 years. We provide solid facts. And with our desktop application, you're able to quickly integrate that into your workflow. And then with Jigsaw, that's when you can really optimize this stuff, because you have the integration right there. You have all the thresholds, and that's why I really enjoy working with Jigsaw, is that we have this macro. We provide the macro foundation, and Jigsaw has the micro. And so you really need both. If you've been solely a micro trader, you're trying to run through. You're running into trees in the forest. You got to take a helicopter view and look down and see where the open spaces are and get to them. And just as if you're more of a macro trader, and you're not looking at the micro, your timing is going to be all off. The order book's all stacked up against you, and hey, I got this signal. Well, that's fine. You got a signal, but the market's telling you that it's not time for that signal right now. So feel free to email me questions, and you can also type them into the
yes,
the
John,
box,
we've got some questions already. I'd just first like to say thank you. Some great information there. I know a lot of traders with discipline issues. I get emails all the time from people. They say, oh, Pete, my trading's not going well. What should I do? And I tell you, okay, tell me what it is you do now. And they just can't explain. They've got no method. They've got no, every day is different. So I love the discipline aspect of this. Anyway, let's go on, sorry.
Yeah, no. Yeah, so, that's the whole point. Just, to systematize what you do, really to get that consistency,
yeah.
And then you're not thinking. Remove that.
Absolutely. So let me just go through the questions. First question, does your service lend itself to fast trading? Example, 30 seconds to 2 minutes in a trade, for example.
Well, 30 seconds in a trade, if that's your standard duration, and you're not running an algo, you're really swimming upstream. That's difficult to succeed. The competition is so big. You need to extend your duration. Absolutely, the metrics are metrics. What we're providing is facts. So, you can, if you know that you're within a threshold and you want to trade within thresholds because you're more micro, absolutely. And being able to see that inside, inside the order book, and trade off these micro moves, absolutely. We support that. We also support if you're a hedge fund trader and you're working a 3-month position and you're just trading off the sentiment bias every day for your, if the market's going there. We're providing those facts, and on a daily, the desktop application is published daily, so the states are daily. We do long-term monthly structure as well, but we don't have that in the desktop application.
Okay, next question, and I think there's a few questions along the same lines. So let me just give you a couple of questions, and then you can answer. So the first one is, doesn't the structure and state vary with time frame? Do you only evaluate daily charts, or do you consider the situation at various time frames? As the kind of first time frame related questions. And do you have a go on, sorry.
So it's based on, so time frames goes back to how the markets are structured, which is based off the big funds, and the big funds are all performance metric based. So what they care about is how does their performance today reflect from yesterday, last week, last month, last quarter, last year. So the real big metric for the funds is monthly, what their monthly performance metric is. And you can actually use that metric and watch trading for the first 2 weeks of the month to the last, as you move through the month, you'll see there's a difference, and you'll see a lot of flurry of activity at the start of the month because everyone's got money to spend. You know, they get cut off if they have a drawdown that they can't trade. You know, they're not allowed to really trade much because they have to keep within these metrics. So at the start of the month, they can kind of take some shots, and so everything's driven by that. But everyone comes down to the day. That's the shortest time frame is the day, because interday doesn't make any sense. It doesn't really matter. Who cares? None of the funds care about that. So the day matters because of the close. And so are we going to hold structure or break structure? So that's why we offer daily structure. You know, and it really it's as simple as that. It's all based off the funds.
Okay, next one. I'm going to skip the next one because you just answered it. Next one says, if I'm trading a 1 minute chart on Crude, how far back do you look to define sentiment bias?
Well, sentiment bias is a function of the state, so it's defined at the start of the session. So we define it for the trade period, and that doesn't change. So that's our R level, and that defines the state.
Okay, then the other one was, which variables are used to calculate sentiment? Obviously not expecting to give anything away there.
It's part of our algorithm, but it's.
Yeah, I don't expect you to give anything away there, John. Right, the next question is, what is the costs? Some people are asking what it costs, and some people are asking what it costs if they only want to trade one market.
Right, so we have, right now the cost of the service is $350 a month, and for the Jigsaw users, we're offering a discount. For a quarterly subscription, we're going to take $100 off of that, and we're also going to offer the personality profile assessment, which is an assessment plus a conversation with me to go over the assessment, about 20 minutes, which we charge $275 for. We do have plans to create some smaller grid sets. So with that's for a full grid, and we will be having the ability to offer smaller grids. At the moment, we don't have it, so that we wouldn't have one market. But let's say you're an S&P trader, you would get let's say the S&P with the Nasdaq, with the Dow, with some ETFs, or if you're a Bund trader, you'd get the Babel and the BTP and maybe the French Haute, as kind of a starter set series, and we're going to come out with a lower price point. But there's it's not live, and everything hasn't been finalized, but we do plan to have something like that.
Okay, so I think for now, John, I think for now we're done with the questions. So with that, I'd like to say thank you. Certainly gave me a lot to think about as well, and hope to see you again here soon.
Yeah, great. No, and if anyone would like to come and test drive our application and the Jigsaw integration, you can go to JSServices.trade and request a demo. And then, if you have any questions that you want to ask me directly, feel free to email me at info@JSServices.com.
That's great. Thanks a lot then, John. Okay, bye.
Thanks, Peter. Thanks, everyone. Have a good night.